Okay, hello traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, November 9th. Good to be with you guys this morning. Ted, Steve, Pete, everyone in the room. It's been interesting start to the week. A little slow on my end. I was out yesterday, but I still managed to get out a couple of setups. We have a lot on tap. Okay, it's been an interesting week. We did get a decent non-farm payroll last week. We have core inflation data out of the US tomorrow, which is likely to be a market mover as well. But for the setups today, we'll look over DXY, Aussie dollar, Kiwi dollar, gold seemingly at resistance right now, sterling, possible exhaustion, dollar yen, possible support, crude, euro, Aussie, dollar CAD, excuse me, and last but not least, we'll take a look at Bitcoin. Any other questions or trade setups you guys want to look at? As always, feel free to throw them on the message board at any point. Here is what the DXY looked like yesterday. So this is actually the setup I gave you on the 7th as we opened up the week. We were looking for the possibility, okay, for possible exhaustion in the dollar. And the reason was that the rally last week really ripped into that key resistance range we've been talking about for months, 94.47, 94.65, the March lows from last year, and a basic 38.2 retracement of last year's decline. If you take this out on the weekly charts, guys, it's still for me all about this red line from 2011. Support, inflection, resistance. It's been resistance for the last, 6 weeks? And that's still the level we need to break. So we're coming into November. It's the same exact argument we talked about last month, right? The rally is vulnerable below 94.65, 94.47. That's key resistance. And if you take a look at that weekly chart and really pump it out, okay, that major inflection or this slope, like I said, has been instrumental in every major turn for the dollar for the last 5-6 years. So this is big resistance, former support. You have that major lateral level we just talked about, 94.47, 94.65. That's what needs to break to mark resumption of the uptrend. As long as we stay below this, the rally's at risk. I don't want to say I'm bearish, but the bullish side is at risk. So where does that leave us? Well, here's what it looks like on the daily chart. Possibility for a little bit of a move lower here. Big rejection again. That's last month's high. That's a new yearly high. That's that key resistance range that we just talked about on the weekly charts. And here's your monthly opening range. Here's your monthly open, right into resistance. Monthly opening range is set. So heading into the 10th, heading to the trade session tomorrow, you're essentially making a test again of this major near-term monthly opening range right below resistance. These are our favorite plays, right? Last month you had the same exact deal. Monthly opening range took shape just below resistance, but when it broke, took a little back and forth, right? But it did drive right back into that 93.30 as an exact 100% extension. Rallying to resistance puts the focus again on a break of this key range for DXY. Core inflation on tap tomorrow. Here's what it looks like on the intraday chart. So as it looked on Sunday, right? So the daily chart, again, we were talking about that resistance, risk for a pullback. Here it is. Okay, here's what it looked like on the Sunday open. We were looking for that break below the November open. Here's near-term support. I still think you possibly get the drive down to 93.72, 93.80. Okay, it's the 618 of the rally. It's the August high. Decent pivot in price. That's really the risk. Okay, if reached, I'd be looking for a stronger, a larger, more prominent reaction there. For me, it's either the drop into this zone to look for support or the pivot back above 94.35 to try again at the highs. Now, typically on a trade like this, I would tell you, even if this breaks, look, it's big resistance here, but based on the fact that this is also right close to the weekly opening range highs, we do get through 94.30s, I think you get another run towards that 65 level, 94.65 that is. So precarious positioning, I love the way it dropped. That's exactly what we were looking for into the open of the week. We got the drop, still hoping we can get a glance down here for a better entry. But the point is, heading deeper into this week, we're looking for downside exhaustion in the dollar. Had a really nice stretch, very nice rally into major resistance, looking if this can peter out towards support. Any questions on the US dollar index? all you have this week, again, like I said, is going to be core inflation. It's not the PCE, it's CPI rather, consumer price index, not the Fed's preferred gauge of inflation, but nonetheless, it is supposed to be coming in at year-on-year 5.8%. Okay, that would be, again, don't take my word for it, but near 20, 30-year highs in headline inflation. Core is supposed to be at 4.3%. Still alarming, right? But certainly not near like a major swing high. So we'll be looking to see the employment. Remember, the Fed's dual mandate is maximum employment and price stability. You know, NFP numbers keep coming in pretty decent. So if we're led to believe that the labor market is healthy, it really continues to put the emphasis on price stability. Again, tying the Fed's hands to really delaying. We already got that taper. Now it's going to be what impact positive data has on interest rate expectations moving forward. So I'll leave that for another discussion. But that's what we're looking at with the dollar. Any questions on this as we head into the US trade session? Okay, that's number one. I'm going to take a segue into euro as I usually do. That was updated on the previous session, or excuse me, I updated you on this one last Thursday. But here's what euro looks like now. Let's just take a step back to the weekly chart, and I'll show you why I'm not really a fan of euro at these levels. So just as a disclaimer, I have a little position on Jamie's 1575 tap. I think you can get a nice little bounce here, but here's what it looks like, and here's the problem with it. You know, this was the weekly chart as it looked back last week on the 4th. We're trying to assess, look, if it's a break below the 2019 high, well then let's get that drop into key support. 114.45, 114.92, massively important. Downtrend support, that's a 50, a basic 50 of last year's advance, and last year's, the 2019 objective yearly open, okay? All of that is right here. If we were to get a drop into this zone, guys, personally, I'd be looking for possible downside exhaustion. That said, you are marking divergence with last week's dip and hold. So price action with the lower low, the oscillator not confirming that low. And you know, you got that outside weekly reversal candle 2 weeks ago. Typically, these can be exhaustion candles, but they're better when they're at the highs like this, right? Outside exhaustion, outside reversal candle to the low at the lows. That's oftentimes, again, another sign of exhaustion. So look, the rebound here would suggest dollar weakness. We just went over the DXY chart. I think there's a little more room there, but we'd have to drive this lower first, and that's dollar strength. So I'm kind of like, I don't know what to do with euro. Here's what it looks like on the daily chart. Okay, a little bit cleaner in that it's got a very tight monthly opening range. Check this out. Here's your monthly open. You try to pop 1621. We've been talking about for months. It's a fib retracement. It's a 2018 high, right? The October 2018 high, that is. And it's a very decent pivot in price. That's right above the monthly opening range highs. Nice resistance. The low that we rebounded off, well, that was the objective yearly low that we made last month. Made a new low on that spike, but closed higher on the day. So euro, that's all to say, guys, that euro is in a very, very tight range, okay, at the yearly lows, just above support. So whereas DXY is at its range highs, setting up a monthly opening range right below resistance, likewise, euro setting up its monthly opening range right above support. So I'm kind of neutral on this. Again, like I said, I do have a small position on for this rebound to see if I can get a pop, but we'd need to clear 1621. That's where like 3/4 of the limit is for me. If we get up there, I'll probably bail on most of it. That's the weekly opening range high, monthly opening range highs. If this breaks, all right, clear case to downtrend resistance. But as it stands right now, it's a low conviction trade. Here's what it looks like on the intraday. All right. So, and here's what it looked like again last week. So the low day closed at 1529. You know, we were looking for some sort of pivot there. We got it on the second strike into the close of the week. We faded into it and then reversed. So that's your quintessential exhaustion move, right? It was a clear support. We didn't get it on that last tag. That's what we talked about on that day on Thursday as we were heading into it. Nice bounce, fake out, and rebound. If this is heading higher, the monthly range lows would need, the weekly range lows would need to hold. That 618 retracement would need to hold. Okay, so if that's my base case scenario. Okay, so limits on the upside, like I said, 1621. That's gonna be the first sort of pivot. Again, look at the rebounds and inflections we've gotten off those ranges. Big pivot. We break through that, I think you're on tap for a larger rally. But as it stands right now, I'm looking for downside exhaustion on euro weakness. Question on euro. No euro data of merit this week. Now, you do get the ECB macroeconomic projections. That comes out on Thursday. It's highlighted as a high-level event, guys, but I don't think you'll get much out of it. So keep your eye on dollar price action here for the euro. Questions on euro dollar. It's number 2. All right, let's go back to last night's update. Aussie dollar. Here's what Aussie looked like last night. So, or into the open of the week, I should say. I keep getting these reports mixed up. Here's what it looked like on Sunday. So the focus here is, again, the Aussie drop made a really nice rebound at that 50. We're looking for downside exhaustion. It's been a nice precipitous drop from that break of uptrend support. We're looking for the downside to possibly exhaust a little bit, right? Here's what Aussie looks like now. The rebound worked, okay, but I don't like this pivot anymore. I've removed this 74.13, 74.08 level. The only thing we're leaving, excuse me, is just the 74.13. We're removing that 38.2. But the point being, we got the exhaustion, right? There's the low. We were talking about possible exhaustion into that 38.2 if it's heading lower. Look what happened overnight. I don't know if that was it, and we're going to head lower again. I really wish we had gotten attack at 74.35. We didn't get it. Slope seems to be holding. At the end of the day, I'm flat on this, guys, but it's a very clear, objective weekly opening range. Here's your weekly open. Here's your weekly range lows. Your weekly range highs are governed by that 38.2. Okay, look for a break of this level. Let me take you a step back. Aussie's at a major level. Remember where Aussie comes from. Here's the weekly charts. I don't think I gave you a weekly update here, but we gave you an update on the 1st for this weekly chart. It's insane. Okay, we called this right on. Guys, this was on the 1st of the month. We called this level dead on. 75.42 into 75.31. 100% extension off the low, 2 equal legs higher. The swing lows that we made back in March and the 52-week moving average converged on that downslope. We loved this trade, okay? Aussie short all day long. The first level of support was 73.85. And that's what's holding right now. Okay, that's right here. Nothing's changed. This is, again, back from the 1st. That was our level of interest. We're there now. The daily chart looked like this. Divergence into that level of resistance. Again, we start to say look lower. Major support. The first level of interest would be 74.13 into 74.08. Here's what it looked like on the intraday chart. Back then, here was last night's update, or the Sunday update. So we broke that downtrend. Here's that 50%, and we just buckled here and failed right ahead of this region. So again, the daily chart, nice pullback. Here's the 100-day moving average. Here's that 73.85 level, holding support. Here's the intraday. Here's what it looked like into the open of the week. So 38.2 didn't get the clip, but we're basically looking for an objective weekly opening range break here. Remember where we're coming from. Again, I can't stop showing you this chart. This is big resistance. If this fails, again, not only is this big resistance, guys, but it's 100% extension, which would suggest that the broader trend is down. Okay, remember, in corrective trends or in corrective moves within the trend, the corrections will typically oftentimes take the measurement of 2 equal legs. So if that's what's happening here, it would suggest that the broader downtrend is still in play. Look for that pivot below 73.85 rather, to mark resumption. So for me, it's either another pump fake exhaustion to fade, or if we buckle back below the weekly opening range, again, you're looking for the resumptive move towards 73.28. But we came off of big resistance. So quick look at Aussie. You do have Aussie employment numbers on tap tomorrow night here in New York. So that would be Wednesday morning, or Thursday morning rather. But likely to be the biggest market mover here for Aussie, at least from their data front. Expecting a print of 50,000 jobs. Unemployment rates actually expected to uptick to 4.8 from 4.6, likely as a result of people leaving the labor force. But take a look at that, or keep that in mind as you head into Thursday. Questions on Aussie? Looking for some clarity. Want to see a break of the weekly opening range, at least get things moving here. At the end of the day, we just came off big resistance. Could get a pop, a little bit of a recovery. If we do recover again, look for exhaustion into 75, into 74.50s, basically ahead of this level. All right, that's number 3. Number 4 is Kiwi. It's even uglier than, well, Aussie's not ugly, but Kiwi, I'm not really a big fan. Here's what it looked like into the start of the week. I wanted to see exhaustion into the upper parallel. I told you guys that the bearish invalidation level was at the 618. Man, it just ripped into that 618. There was a lot of hoopla, a lot of mess, okay? And now this exhaustion. So what is this? Is this a breakout, or is this just false break, a throw over, and we're going to continue lower? That's my kind of concern. That's my issue with Kiwi here. I told you guys to look for exhaustion, possible fade opportunity to 618, but it took us out of the formation, and that slope has been support. So I don't know if I'd want to get, into fading this per se. Let me take a step back. Kiwi, again, is one of those trades that came into massive resistance, even more than Aussie. And I remember showing you this multiple times, 71.89 into 72.46. You got 100 off the low, 2 equal legs. You got a 618 off the high, my favorite Fibonacci confluences. You got the objective yearly open, all fact. None of these are subjective. They are all objective observations in price. So the question we're asking is this a breakout of the downtrend for the year? If it is, we need to mount here. If this is exhaustion, I want to buckle back below the 52-week moving average to get the pullback. So it starts the month and like, well, what do? You're right below resistance. Again, it's Kiwi. This is my problem. I'm kind of pissed off at this trade because I missed it. But at the same time, looking for re-entries here, I don't think is the prudent move. Here's what it looks like on the daily chart, right? Here's your monthly open. You dip into confluence support. It's the 38.2 of last month's range. It's the median line. Rebound still holds keys resistance. If I look at a chart like this, okay, from the daily standpoint, inherently, I'd be looking to fade stretches into the zone. Okay. The problem is that where we are in time, and on the back of this stretch, if this is a 1, 2, 3, this could still be a 4, and we still need the 5th wave to complete sort of larger advance. So I'm getting conflicting signals here on Kiwi. Okay, ideal scenario, again, lollipops and rainbows and unicorns. You get another failure here for one more drive lower, and then you look to base a larger recovery. But again, that's just me, guys, not a trade recommendation. I'm looking for a tell here. At the end of the day, if we exhaust and buckle back below this formation, it would be encouraging for a pullback, but I would still want to look to reformulate sort of the slope. So let's say, for argument's sake, we bunk that and we go with something like this. We say, well, that could be a slope, right? 1, 2, that could be interpreted as a third touch. All right, and if you do that and you drop the lows, it does give you a parallel of confluence. Now you look for a bisector of that. If we drop this into the former highs, you can actually see some decent pivots, but the most pertinent one was this: break, resistance, instant support. So end of the day, the exhaustion is all against this high. Anything above this, you're risking right back into 72.20s. I don't want to sit 100 pips down. So that's the extent of where Kiwi is. It's really do or die. These highs need to hold. if we are going to make a move lower. But at the end of the day, the daily chart wave count would suggest, even if you break lower, that actually might be a better basing opportunity to get long. There's no Kiwi data of merit this week, so it's not going to be something where you get an economic event that'll give you the catalyst on it. But it's very similar to Aussie in that the top side certainly looks a little bit exhausted here near term. You just came off of huge resistance. This was massive, massive level. All right, questions on Kiwi? All right, that is number 4. All right, also from that update, let's hit where we are on gold. This one's been insane. This is number 5. Are we at resistance in gold? I think so. First resistance level of note, that is. Here's what the weekly chart looked like. You know, the first major level that pops out here was going to be the 52-week moving average. We were talking about that for a while. That broke. The 618 retracement gives you 1825, and that's an absolutely critical level. The breakout zone on the weekly chart is 1850. We're not quite there yet, but that's what would mark resumption of the broader multi-year uptrend. Okay, so what did the daily chart show? Well, the daily chart showed us breaking through this major confluence zone again, 1809. We talked about it ad nauseum. Let me show you the real chart. All right, and that was defined by the 100% extension off the low and the 786 retracement from the decline off the high in September. You saw that held the high in October. Here's the breakout. The first major level of resistance beyond here was right here at 1825, 1829. We're there now. Okay, we're there now. Now this level is absolutely critical. Why? Is it just because it's a 618? Because the HDC high day close and the 618? That's part of it. But also, stop traffic. You have basic trendline resistance. 1 touch, 2 touch. Is this the 3rd? Remember, in basic technical analysis, any 2 points can make a trend line. It's the 3rd touch that's going to give you the confirmation of whether it's actual viable pivot slope or whether it's just 2 points. So that's all to say, guys. I'm looking for something here today, this week. Okay, if you clear 1825, 1830 on the upside, look for 1849 on the weekly chart. That's what we highlighted as sort of critical resistance, right? Here's gold on the weekly. So 2 levels of interest as major resistance. If you're holding gold longs, this is where you want to take a little off the table. If not, break your stop to break even or better, but looking for inflection here. Here's what the intraday chart looks like. And here's what I showed you guys again to the open of the week, right? The basic focus was to look for what kind of reaction we get into 1825, 1829. We're there now. We're there now. If it pops, it's likely to be another runner. Remember, I always try to give you guys a heads up on this stuff. A breach of upslope resistance, oftentimes the sharpest part of the move. So gold is testing some pretty big levels here. Pretty big levels. See how that pans out into the core inflation report tomorrow. Any questions on gold? Okay, next up is British pound. Here is what sterling looks like from last night. So the basic premise for this trade on sterling, looking for topside exhaustion. Okay, the rally had manifested last week. It started, but the pivot above resistance didn't happen until this week, with yesterday's break taking this thing right to the 38.2 retracement to the February lows. That's 35.67, 35.80. Here's what sterling looks like right now. A quick note, I'm going to take a step back and show you sterling on the weekly chart. Here's the big play though. So the 2017 high week close was 34.94. Okay, you can see major pivots along that plane. That's a 2019 high, that's a 2020 high before the break. It's the lows for the year, pretty darn close, and that's where we're sitting at right now. Okay, this was a big drop. It's one of the largest drops that we've seen in sterling since back in August, but it took it right back into downtrend support and right back into that 2017 high we close. So what do you do from here? Here's the daily chart. Okay, so here's last month or for the year. This is the low day close for the year. Look at the low we just made. Okay, the low is 34.25. Right on the mark, the low day close for the year. You can't make this stuff up. Here's the rebound. This is the resistance level we were talking about in that update. Watch 38, 35.82, 35.67. Here's the intraday chart. Nice move, right? You got the overthrow, typical sterling, but a nice move nonetheless. So I do like a decent pullback here. The ideal, let me take a step back. Bearish invalidation here would be at the, at the yearly open. If we get through the yearly open, forget about it. Hello, Mike. Hope you are okay. Long time no see, I guess, but catching everything on time so I can trade properly. Hey, Eman, great to see you. I think you got a couple typos there. I'm not able to read. But it's early in the morning, so it's great to see you always, Eman. Welcome back. Decent move. So guys, by the way, while we're talking here, that Euro trade is starting to move in the direction of our favor. So if you were looking at that entry last night from Jamie, it's looking pretty decent. Again, look, 1621 is going to be the first level on the upside. But for sterling, yeah, this is what I'm focused on right now. Possible exhaustion highs we get deeper into the week. You'd need a break below 35 to mark resumption. Look, sterling on the longer term charts, this is what bothers me. It could rally all the way into 36, 37, 36.50s, and it would still be the break of the uptrend. So I do think you get some exhaustion. I think the top side could have a little bit more oomph, but I'm looking for exhaustion basically ahead of this region if we're heading lower. All right, questions on British pound. You don't really have a weekly opening range to play with here, so it's kind of stretched. So I'm still focused on that 35 level. If we get back below that, I think the downside gets deeper. You mean euro short or long? We are still looking for exhaustion at 1620. So for the euro long, I told you earlier I was in this again. Jamie had a position entry on this for 1575 last night in the swing update. So does that make sense, man? So the last swing update had that entry at 1575. No worries, man. So sorry I'm late. As always, didn't catch the webinar. No worries, no worries. Don't go chasing now if you're not already in this. We've already seen the initial thrust here, but opening range for the week, opening range session for the US session should really continue to see that pop higher if we are heading towards 1620. Okay, so that's sterling. Possible exhaustion, number 9. Here's number 6. Here's number 7, dollar yen. So what can I say about dollar yen? I told you guys last night I was looking for 113 on a stretch there to be a little bit more of a support though, not the break and retest. So again, our update from last night, okay, looked like this. And so I just wanted to get, like I said, I just wanted to get a tag of 113, but generally looking for downside exhaustion. Here's what the chart looked like last night. There's 113, okay? You plummeted into it, and it's actually serving resistance. So here's where we need to pay attention. The idea of I was working with was to actually fade. If you get a 13 pop and maybe a little bit deeper, fade that for a move higher. But certainly if we break this and you're getting rejection at former support, this would actually entail or would suggest a break of downtrend support. I would actually look for a thrust towards 112.50. I'm not in this as a disclaimer. I was again, I was looking for that exhaustion pump, but this right here is suggestive that we could actually see the extended move down towards 112.56 and even lower. So I'm not in dollar yen. I'm looking for, again, if this interpretation I'm telling you is correct, that high should hold. That high should hold. And 12.56 and 12 would basically be the next downside targets, but not my cup of tea here. Not my cup of tea. Let me take a step back. Here's dollar yen on the weekly charts. This was actually exceptionally clean. Dollar yen never gives us this kind of technical clarity, guys. And when it does, it's always super impressive. And that level is 14.55 into 115. Okay. Beautiful mark, 2018 highs, 786 retracement from the decline off the 2016 high. Upslope resistance for the median line. Really nice pivot and a reversal candle there last week. So we've been looking for the pullback. The weekly chart has us at the 25% parallel. Okay, critical support still 112 on the weekly charts. Nothing's changed there. The question is, are you going to see a rebound off that median line slope like you did here, off the 25% parallel? Or if this breaks, accelerated shot right into 111.50, 112. This is huge. So that's where I'm at with dollar yen, right? There's no yen data or Japan data of note. Your next Japanese print comes in on Friday, I think, with the GDP annualized preliminary read, which is not going to be anything big. So again, it's going to be sentiment and dollar price action. So that's the weekly chart, and that's where my concern comes in on the pullback for dollar yen, right? We're at uptrend support there. Daily chart looks like this, okay? Leaves a little bit more room for the downside, right? A little bit of a different view. It's the same slope, but on angle, right? On the time value, it basically gives you room to 112.50s again on the downside. And I think you get it. And I think you get it. Why? Well, you just broke below the 100% extension. If this decline was corrective, I would want to see 113 hold. Now it still might. If we close today above 113 and there's no daily close below, it might very well be a false break and a fadeable low. But at current standings, all things held constant, if we close out the session aujourd'hui, today, I think you're looking lower. That would be a break. Questions on dollar yen? Again, I'll be looking at this with great interest as we head into those inflation numbers tomorrow for the US. Specifically, when you look at dollar yen, I always like to take into account what we're seeing in yields. And here's what the 10-year yield looks like, guys. It's insane how clean this has continued to play. I'm really, really impressed. Like, you get those guys out there, oh, you can't do technical analysis on rates. Why the hell not? They're just doing it wrong. It's been pinpoint, literally. The high day close caught the high. Once we pivoted back that major resistance level that we were looking for, here's support, couple of days, over a week, break lower. Here's the level that we were talking about on the breakout. 143, 142. Look for inflection, look for a reaction here today. Okay, and that it puts the same shadow that we're seeing on dollar yen, right? If we get a little bit lower, look for reaction right there. Questions on dollar yen or yields for that matter? Okay, so that's dollar yen and US 10-year. Number 8, number 9 is crude oil. So it's not really essentially basically a trade. It's whether we're at the resumptive tact or not. Here's what the crude oil looks like on the weekly charts. All right, so first thing you'd notice is that we came off of uptrend resistance a few weeks ago. Oh, that's pretty cool. Well, last week you even got another try to test higher and ended up lower on the week. But again, ahead of the weekly close, we repaired a lot of those losses. Here's this week. So the weekly chart doesn't have you near resistance, doesn't really have you near support. I mean, the slope is there, but not really support. So more to be desired on the weekly chart. The daily and the intraday looks pretty darn clean. Okay, I'm going to drop the 618 at this point just to clean this up. Let's just delete that. Here's what it looks like on the daily chart. Broader uptrend resistance, perfect tag. Here's your monthly open. Here's the break of uptrend support. Here's the pullback. If this pullback is satisfied, this is 1, 2, 3, and this is just going to be the correction, you'd need a break above what? You have the monthly open right here at 83.34 and the high day close for the year at 83.68. That's your key resistance. Okay, you need that break to get the extension up towards, again, the 2013 low was what caught the high actually here, almost to the pip. That's 85.61, but now in time, it's the January 2020 high at 87.14. Where does the 90.68 fib come from, Ted? 90.68, this one. Yeah, gotcha. Long term, buddy, long term. It's the whole decline from the July 2008 or June 2008 decline. So all this, the 618 of that multi-year rally, decline rather, is going to be right there. Make sense? Ted says, great, thanks. Hey, you're more than welcome. Yeah, you're more than welcome. And Ted, that's why the multi-time frame analysis has always been a part of my trading, because you would have never seen that on a 30-minute chart or an hourly chart. Hell, probably not even a daily chart. I identified that mostly from what we're seeing on the weekly charts, because that's a lot easier to map out here, right? It's a lot easier to see that massive decline. 618's right there. Okay, not only that, but it's going to be on pace with the upslope. So it's just really critical levels, guys. 85.61, 90.68, and this, if we do breach, would be breakout. Like, I do think we're going to see $100 barrel oil again, no doubt about it. The question is it going to correct harder off this uptrend for a larger pull towards uptrend support before the resumptive trade? And that's all based on 83.68 for me. Monthly open, high day close. That's your key resistance. Okay, so I didn't even show you the scalp. Here's what the scalp looks like now. And here's what it looked like last night. Or when was this? Yeah, this was last night. Crude. Questions? Key resistance, 83.28, 83.68. All right, that is number 9. Number 10, here is dollar CAD. Looney, looks like this. So start off with the weekly chart. Big pivot level, okay? 124.60, 124.62, 124.60. 24.60 is going to be the 2016 swing low. The 100% extension, this is from the decline off the highs we made. Okay, decent pivot zone. Look where we came off of support, the downtrend. Downtrend support, pivot back above, now support, and we're sitting right here. So on the weekly chart, resistance is right here, 24.60. Support, 23.14. Here's what it looks like on the daily chart. And this is why I don't like it. Okay. So we highlighted that 24.40 level. Here was the swing low from that July dip right before the rip into the yearly high. We highlighted that region. It was a pivot break on the way down. I showed you this last week, guys, this uptrend off of these two or the original slope. Here's what that looked like. Remember, again, dollar CAD gave us a clear exhaustion outside reversal off the lows. Okay, so a daily outside reversal from the low, covering it, that's pretty bullish. Okay, the last times we got those are highlighted here in yellow. They've been very constructive. So we started looking higher, obviously, last month, right? We want to see if we break the downslope. That broke. Is this a breach of uptrend resistance or hold? If you put this on a closed level, it's right there. What is that? What is that? So I'm a little bit hesitant to do anything on dollar CAD. Guys, the last 3 days, or don't forget today, the last 2 days have essentially been a doji. But it's not getting the pullback. So what do? These kind of trades, guys, I just sit on the sidelines, to be honest with you. Here's what the intraday chart looks like. And if this excites you, then you've got more guts than I do. But, what the heck is that? You pivoted above that zone that we were looking for, 2420s and 2440s. We're looking at all last week, resistance, resistance, break. Now support with the uptrend. So if this holds a break of the weekly opening range highs, guys, and you're looking for 2490, you're looking for 2520. It's just a super tight coiled range into the open of the week, which is insane, into uptrend support. The only trade here, guys, again, my humble opinion, long against that low. If you want to be a little bit more conservative, 2420, and you're looking for the break of the weekly opening range, you're at support, bottom line, like any way you slice it. Questions? If it pivots below, yeah, okay, I see your question there. Yeah, if it pivots below 2422, yes, you probably get a quick run into 2380, but this is still key support. This is still key support. So it might fuel a correction, but I'm still constructive all above 2360s. Make sense? Yeah, you're more than welcome. I appreciate that. Okay, that's Euro and dollar CAD. That's everything from my list except Bitcoin and the SPX. Let me hit the SPX real quick. Guys, there's not really much to say. It is a breakout, but I just wanted to show you that nothing supersedes slope. And when you go into uncharted territories, meaning, fresh all-time highs, you don't have lateral levels. You have measured moves on account of extensions and fib retracements. You have basic trend lines, but it's really slope that's guiding everything. So I want to show you here on the daily chart. This was a major breakout. Note that since that breakout, we have not seen one single down day in stocks. Note also that that breakout that I'm pointing to right here with my cursor, look down, was the breakout in momentum. And ever since then, we've been in overbought. And guess what? Ever since then, we haven't seen one down day. So that's all to say, guys. This is a primary example of why people really need to take heed when we talk about oscillators, right? You know how many people over the last 2 days have been telling me they got a short SPX because we're in overbought territory? Yeah, they probably are not too happy right now. Not to be cruel, but this is something, a lot of people tend to go overlooked. I'm not going to short a trade while it's in overbought territory. The break below overbought is going to be your signal. But it can stay up here for the next 3 weeks and we can continue rallying 48,000. You're sitting there in a short. Doesn't make sense. So I just wanted to highlight this from the daily chart. Here's the weekly chart, just to put things in perspective on the broader scale, right? The weekly chart has a lot of room to the upside. But I wanted to show you the intraday chart, and this is what we've been following. I haven't touched this at all, guys. This is the same slope we were following all last month. 1, 2, 3, median line break. We had those sliding parallels which caught support, breakout. Here's the upper parallel. Okay, so you can see really, really near term, and again, I don't want to get too granular with this, but you can see a little bit of a consolidation right here. May offer a decent break, right? May offer a decent break. If it breaks lower, support at the median line, that converges pretty darn well with these slits here around 46.60. A break higher and you're looking for all slope. Okay, so just keep that in mind on the SPX. Bitcoin looks like this. So remember, last week I told you guys about that new analog from the October 2020 advance. Man, oh man. Sometimes the technicals amaze and sometimes the technicals are extraordinary, okay? Really nice, perfect correction, 100 off the high. We noted this key pivot level. We started talking about 66.30, 300, 64, 800, 65 essentially, 1,000. That's exactly where we petered out and failed in October. Yesterday we closed above, keeps the focus higher, well above 65,000. You're looking for upslope near that parallel, comes in right now near 73, but the next objective lateral level of resistance is 77,600. Okay, you pull up the levels of support. Near-term support now gets pulled back up. Gets pulled back up to that 59,000 level. Bullish invalidation gets pulled up to at 56,300. That low that we made late last month. All right, so the levels are pretty good. No change. Bitcoin trying for a breakout here. Even if it pulls back, guys, we're still in an uptrend. Correctionary, worst case scenario, it corrects like mean, 53,000 would be a decent possible entry again. But there's a lot of talk, and as this thing comes into new highs, the more chatter I see, the more reluctant I get to continue to find the initial stretch higher. Could get a decent pullback here. All right, guys, that is everything on my list. Let me know if you have any other trade ideas or questions you want to review. Again, the main economic announcements for the week basically come in tap tomorrow with that core inflation read from the US and the employment figures later tomorrow night with Australia. GDP figures out of the UK towards the latter part of the week on Thursday. I don't really think you'll get much of a play there, but we are looking certainly for what we're going to see in sterling price action on the back of this move. Whether it corrects and kind of exhausts lower. The euro trade, no change there, guys. Again, nice, decent stretch. We'll continue to see if we can't get that pop higher. Keep your eyes on those projections that we get back on Thursday. Might be a decent mover for euro. All right, no other questions or trade setups. We'll wrap it up there. Best of luck trading, guys. I will see you on Thursday for another intraday strategy webinar right here on SB Trade Desk, guys. Happy trading. Cheers.